Okay friends, let's start the example. This is the ideal situation where there is nothing, means the company has started now, and I have shown balance sheet, income statement and cash flow side by side, so that we can understand it very easily. Now at the starting, the company's promoters will fund the company with, suppose, 10,000 rupees. The company has started with 10,000 rupees. Is this 10,000 will stored here, because that has to be stored somewhere, and that is as a liquid cash, so it is stored here, and it will affect here also because there is a proceeds from the shares. So in cash flow, this is inflow for the companies, so total it will show 10,000, whereas it is also so 10,000. Now total assets and total liability are equal, so there will be a checkpoint. Let's see, there is a checkpoint, that is a check. Let's see, that is a checkpoint. If we put it like this, okay, if we put like this, equal this minus this should be 0 always. Sorry, I have made a mistake. This is not C16, this will be this C16 0. So we can see this now. Company is buying a plant or machines. Suppose it is a manufacturing company, and for making a product it requires a machines, so it's buying a machines of amount 3,000, let's say. So it has costing 3,000 for them, and for this 3,000 they has to pay the money, so they are paying the money from here, that is minus 3,000. So they will end up the cash balance of 7,000, and here we can see they are borrowing a fixed assets, so it will incur them 3,000. They has purchased 3,000, so now they end up with the 7,000 here, you can see, and this it is equivalent to this. Now company is buying some raw materials, and so if he is procuring a raw material, suppose of, let's say, 3,000 rupees again. Suppose this is procuring a raw material of 3,000 rupees, but it has paid 2,000 rupees in cash, and 1,000 it got credit for, let's say, 30 days. So in current situation, the inventories will increase to 3,000, because the total raw material cost is 3,000, but what amount he has paid, that is here, he has paid 2,000 amount. Then remaining amount, it is under accounts payable, so this is my payable. Now if this is payable, then this current liabilities is equal to sum of these total. This is the sum of these. So you can see the checkpoint is matched, but the cash balance has not matched yet. Now we brought the inventories of 3,000, right? So 3,000 is here, and payables is 1,000 here. So you can see the total, it is 5,000 net cash balance, which is equal to this net cash balance. Now company has incurred some costs, like labor costs and machine costs and other costs, which is just related to make this raw material to the finished goods. So let's say company incurred a cost of 70 rupees, or let's say 70 rupees cost they had incurred, and the employee cost they had incurred 30 rupees, but these two, these cost, these 30 rupees and these 70 rupees, they had not paid. Like this is the electricity bill and all those things, and this 30 rupees is the salary costs, so they will pay in the next month. So, or maybe we can take it as that they had paid. If this is been paid in cash immediately, then there will be a minus from these accounts. So this is 70 rupees minus 30 rupees. Okay, now from the capitals we always know that the reserve and surplus is always equal to this net profit. So again you can see this is again equivalence. Now these expenses is incurred here, 70 rupees plus this 30 rupees I have incurred here, which I has to pay, so I paid it, and you can see the cash balance is evenly matched now. Out of these 3000 inventories, I have converted 2500 inventories into the finished goods, and I sold it for 4000 rupees. Let's say if I sold it for 4000 rupees, that's means 4000 is my total revenue earned, and for that I have spent 2500 inventories costs. So this is the situations. Now these inventories which I had to reduce it to 2500. This is I had to reduce it because currently I am holding only 2500 I spent. This is the situations, and I sold it for 4000, but out of this 4000 I got only 3000. Out of these I got 3000 as cash, and 1000 is my receivables. So this is the situation now. So you can see again total asset equal to total liabilities, but this cash balance has not matched. Why? From the operations, that is how much money I have earned, that is the 4000 I have earned, and these receivables is 1000. So I am putting this 1000. So you can see this net cash balance equal to this net cash balance. Suppose I need a software, accounting software, because I cannot take it or write it in the notebooks. It is very difficult, so I need accounting software, and for this I need a license software, and I have paid the license. So it is already prepaid expenses, and that license, that software itself cost 1000 rupees, and the license is cost 200 rupees. So I am paying this 200 rupees, and also my plant machineries, these software costs is increased by 1000 because that the cost of the softwares, and this expense means these subscriptions, this license is renewed to be in every year. So I am putting it in current assets, but from the cash what I have to do, I have to pay this 1000 minus this 100, both I have paid. So this is the paid, this is the cost I have incurred, and this is my expense, this is my expense. And let's see, these are my expense which is to be incurred. whether I have taken that into account. 100 rupees, yes, 100 rupees and 1000 rupees. Okay, prepaid expenses is 2000 rupees, sorry, 200 rupees prepaid expenses. I have paid the cost of 2000s, so this is 2000 rupees I have paid. Now you can see this is equivalent. This is the prepaid expenses, that is the cost of the license. And now let's see here the expense. Here I have to pay that because the inventory is increased. Sorry, not inventory, it is the fixed assets. The software is my fixed assets, so this plus I have brought 1000s, so this is my 4000s. But this 200 which I have paid as a prepaid expenses, it is a cost to me, but that cost has not been incurred, so that cost is not shown in income statement because it is paid, but for this year it is 200 rupees, so I will show it here SGA 200 rupees, and I will increase my expenses by 200 rupees, and this difference is here. So whenever I am showing SGA here, I have to remove it from here. Or we can say that some amount will be paid in the next year. So if I am saying like that time I have to reduce it 100 years. 100, suppose I am paying this year and the remaining 100 I will be paid next year. So this is 100, that time it will be changed to again 100 because 100 I have incurred, and this will be my 100 that time. And this will be not 200, it will be 100. I have paid 200, so it will be 200. It's not a 100. I have paid 200, right? Not 100 I have paid. I have paid 200 itself. So now it is equivalent. This is equal to this, and the checkpoint is also 0. Suppose my business is going very good, so the other persons are thinking that my goodwill is very good, so that can be shown here, but on the first year it cannot be shown. So let's see now. Interest, I have not taken any bank loan, so interest will not come. Finance costs, if I am paying the interest cost, or if I am borrowing some long-term money, then time. And tax, if I am paying tax here, that time I have to reduce it from here, expenses. And if I sold some assets, suppose I am selling the one machines which is costing of 500, so this is the selling cost, and that time this amount will increase my cash balance because I will earn 500 rupees, and that 500 rupees is the amount I have incurred. That's the same amount if I brought it for the 500 and sold it at 600, that time it will shown as a revenue for the 100 rupees, but here I have not taken it in account, so I sold 500. rupees. So again it is matched, evenly matched. So like this the balance sheets is work. Suppose at the end I am paying the tax of 100 rupees. I have to pay the tax. So this is a tax, this is a cost I have to paid, I have to incurred. If I am paying the 100 rupees, that means this is going from this paying. So now it is evenly matched in this, and it is an expense for me here, though it is not shown expense like that, but it's expense for me in the cash, that is the paid. So again, whether I have shown it 100 or not, sorry, it is not minus, it is plus. Yes. So now you can see this is evenly matched. Now if the company want to invest somewhere and getting earned for this, that time investment will come here and the income will come here accordingly. So now you can see, and now the total net profit is 1200, which will be added as a reserve and surplus, and the total equity will be that time 11,200 and the total liability will be 12,200, because account payable is 1000 and here the cash balance is 7,100. Account receivables, that means I had sold a product of 4,000, but that time I got in cash is 3,000 and remaining 1,000 was in credit. So this is showing here. And this is a inventory, that is the raw material I have procured at the starting 3,000, but I made finished goods of 2,500 inventories and 500 is remaining. Raw material is stored here, and prepaid expenses, that is the software I have bought for 1,000, and for that I have paid 2,000 rupees, 200 rupees as a license fees, but that license fees is for over the years, and for this 6 months, let's see, it is 100 has been incurred in this year and 100 for the short amount is to be incurred in next year. So 100 is the prepaid expenses and 100 is shown as the expense here under SGA, general administrative expenses. And this is the property, plant and equipment, that is the fixed assets. At the starting I bought machines. After that I sold some machines at the 500 and I bought a software of 1,000 rupees. So this is a total non-current asset, and this is a total asset is 12,200, which is equal to the total liability sides. So the total checkpoint is 0. And if I see this here in the cash flow, that means these operations, these plus, if we see the formula, we can see that what it is showing, H3, that is the profit from the operations, plus H5, plus H6, that is the payables, because payables means I had to pay but yet not paid, so it's stored in my cash, that is the positive. And the inventory that I has paid or purchased, that is the negative. And H4, that is the receivables, that also I have not received, so it is lesser in my account, so it is also negative. And H7, that is the expense I have incurred. Same here, the fixed asset sold and fixed asset purchase already we have seen, and it is from the share purchased. At the starting, when the company is started, they had put the money against the share, that is 10,000, so it is showing like this. So now you can see it is evenly matched. As the company goes on, these others accounts will create, and the number will come to those accounts, and that time also we had to maintain 3 sections simultaneously so that there is no discrepancies. Thank you.